Have you ever stopped to think about how much of your life is actually run by a single number? You know, a number you might not even know exists, but it follows you everywhere? We're going to dive into this because, believe it or not, this invisible number has a massive say in the kind of life you get to live.
Yeah, I know. It sounds a little unsettling, doesn't it? But it's absolutely true. Right now, whether you like it or not, someone is keeping score. It's like a grade for your financial life happening in the background.
And here's the kicker. What if that quiet little number wasn't just, some random piece of data? What if it's the actual key that can either unlock or lock the doors to some of your biggest life goals?
All right, so let's pull back the curtain, shall we? We're going to start by unmasking this invisible number and figuring out what it really is. Okay, so this invisible number has an official, kind of fancy name, your financial risk profile. But you and I, we probably know it as a credit score. That's all it is. At its core, it's just a prediction, right? A simple three-digit number that tries to guess how likely you are to pay back any money you borrow. So where does this number even come from? Well, it's not magic, that's for sure. It's actually a direct reflection of your habits. It's basically looking at things like, do you pay your bills on time? Simple enough. How much debt are you carrying? Are your credit cards maxed out? How long is your financial history? And are you suddenly applying for a bunch of new credit all at once? Every one of these things helps paint a picture, a part of your financial story. Okay, let's get practical. How does this actually play out in the real world? We'll start with the big ones, the most common ways this score really impacts you. Getting loans, and yeah, even finding a place to live. Seriously, you can think of this score as a kind of gatekeeper. It's standing right in front of all those huge life milestones, buying a car, getting a mortgage for a house. And your number, it's what decides if that gate just swings right open for you or if it stays slammed shut. So let's take a number like 780. That's generally seen as a really good score. To a lender, that number screams, hey, this person is a reliable bet. But what does that actually mean for your bank account? Well, the difference is, honestly, it's staggering. We're talking about the exact same loan, but the person with the high score, they're going to pay way, way less over time simply because they get a better interest rate. See, a low score just means you look like a bigger risk, so lenders charge you more for the privilege of borrowing their money. On a car loan, we could be talking thousands of dollars more. And for a mortgage, oh man, the difference could easily top $100,000. That's a lot of money. Okay, but it's not just about borrowing money, right? What about something even more basic, like just trying to rent an apartment? You guessed it, landlords check this stuff all the time. They run a financial background check, and your score gives them a quick snapshot of how responsible you are with your money. A lower score? To them, that might suggest you could struggle to make rent, which in their eyes makes you a riskier tenant. All right, so loans and rent, that kind of makes sense. But this is where the story takes a turn, where it gets a little more surprising. Let's look at the hidden ways this number can really affect your life. Just think about this for a second. Your career, your job prospects. Do you think your financial history has anything to do with the job you can get? The answer, and this is a big surprise for a lot of people, is yes, it absolutely can. Especially if you're looking at jobs in finance or government or really any position where you'll be handling money. Some employers will take a peek at your financial profile. Why? Well, they see it as a way to measure how trustworthy and responsible you are. Okay, you ready for the next one? Let's talk about insurance. Car insurance, home insurance, pretty much all of us have to pay for it. But did you have any idea that your financial score could be messing with your rates? It's true. Turns out, insurance companies have found a link, a statistical correlation, that suggests people with lower scores tend to file more claims. So what do? They often use something called a credit-based insurance score to help figure out your premiums. The bottom line is, a lower score can often mean a higher insurance bill. So the big takeaway here is that this one number, it's creeping into almost every single corner of your financial life. Now, I know what some of you might be thinking. This has got to be just a US thing, right? Well, not exactly. This whole idea of financial scoring is actually a global thing, even if it works a little differently depending on where you are. So here in the US, the system is all about that one score, and it's run by private companies. But in a lot of Europe, it's different. It's more of a registry system. It's often a mix of public and private groups that just keep track of negative stuff, like if you defaulted on a loan. They don't really create that one all-powerful number. So the goal is the same: figure out the risk, but the way they do it is totally different. Okay, we've seen how this number gets calculated and all the surprising places it shows up. So let's bring it all together.
So what's the real bottom line here? It's this. Your financial risk profile, your credit score, it's so much more than just a number. It really is a story. It's a running summary of your financial habits, and it's a story that's being told all the time to lenders, landlords, maybe even your future boss and your insurance company.
And that really brings us to the final, and I think the most important question of all. See, this story, it's being written every single day with every financial decision you make. So the real question you have to ask yourself is, what story do you want your number to tell?